What's going on, guys? Today we're going to be talking about using your VA disability as your sole income to qualify for a VA home loan. We've mentioned it in multiple videos, but we never really broke it down. So that's what we're going to do today. And as a side note, if you have additional income, you're going to follow the exact same formula. You're just going to need to have your pay stubs in front of you. And this is how the VA actually calculates it. I'm going to be pulling information from the VA handbook. Just so you guys know, all the things that we talk about isn't like we come up with it or there's lender restrictions. We actually go to the VA, and on VA's website, it actually has everything listed that's required for a VA home loan. So drop that link in the description. So let's go through some basic terms before I go through some examples, because you need to know the terminology. So one, what's called a debt to income ratio. So basically DTI is what we call it in the business, is where a lender looks at your gross income, looks at the liabilities on your credit report plus the new payment, and they divide it against each other to come up with a debt to income ratio. That's how majority of loans are done, right? FHA and conventional are done with DTIs. VA loans are unique because they look at what's called the residual income. Residual income is your net income minus all your expenses on your credit report, minus any self-reported debt that's not going to be factored in, the new property payment plus 14 cents per square foot for utilities, right? No other loan program does that. Now, if you're exempt from paying property taxes, not all lenders can exempt you or qualify you without those property taxes. So make sure that you talk to them and see if that's possible, because it does give you more purchasing power. So depending on where you're at or how your state works, there could be a delay in getting those exemptions. Sometimes it could take a year. Sometimes it could take a month to do so, but you need to understand it. So let me show you guys where that is. Here in the VA handbook. So this is actually in chapter 7 of the VA handbook. So there's going to be two basic sections that I want to talk to you guys today about, okay? Within this. This is the residual requirement for loan amounts for loan amounts $79,999 and below, which is really not going to be that many folks out there, but it's going to be based on your family size, and it's going to be also based on where in the country you are. So let me scroll down a little bit. So this is going to be a little bit obviously higher for loan amounts $80,000 or more. So this is what your net income needs to be after all expenses. So you can imagine that on high income, high property, that's high value properties, your debt to income ratio can go 70-75%, which is dangerous. This is why we always say to budget, so you know how much money you can afford on a housing, because the VA is pretty loose on what it requires. And then this is where it shows you where all the areas are within each of those demographic regions. It's important to note this because there's also some other restrictions depending on if you're over a certain debt to income ratio. Then also you might be looking at having a higher residual requirement. This is something that the VA both has in place, but lenders also will have some overlays to that. And basically what lender overlays are is where the VA has come out and said, well, this is what the VA is going to accept. And then a lender is going to basically say, well, that's too risky for us. We want to put an additional protection to that. And I'm going to go over some examples to that here in a little bit. Now, lenders are going to look at the combination of both, right? Your residual income, and they're going to look at your debt to income ratios. For active duty, right, this is for VA disability, but if you're on active duty, they do really cap you at 55% for the most part, unless you're doing a big down payment or you have a lot of reserves. So those are all things that you kind of need to think about, and that's why working with an experienced lender, walking you through that is going to make a life a lot easier, okay? Now, let's talk about a couple of things that you need to know when using the VA home loan. Well, there's two parts to a VA home loan. There's eligibility and there's qualification, right? Eligibility is, do you meet the time and service and character of discharge to use your VA home loan? And just because you receive VA disability does not mean you're eligible for the VA home loan. I come across it more often than not. So it really depends. And I'll give you an example. Character of discharge. A lot of people are like, well, I got a medical discharge. We look at their paperwork like, you didn't get a medical discharge. You got a general discharge. And they may not be within the time requirement to use a VA loan, which is 24 months on active duty. The reason why that is because maybe they wanted to rush out of there. They don't want to go through the med boarding process. That's actually happened more often than not. And then basically they don't have their VA home loan, but they may have 100% permanent and total disability, but not use the VA home loan. I think that's crazy. But again, it depends on that piece. You can serve 1 day in the military, get a medical discharge, and use your VA home loan. That's definitely possible to do. Eligibility combined with qualification, right? So do you meet the income, credit, assets, and collateral, which is the property you're purchasing, doesn't meet the VA's requirements. A lot of veterans if you meet the service, almost all people are eligible for the VA home loan, but not everyone is qualified. That's what we teach and preach about all the time on VA Housing Education on our platform to get the veteran community educated on how their benefits work and how to position yourself in a better position. The other thing that you need to know, and then we're going to go into some examples, is that VA disability is tax-free. Now, this applies for like Social Security. If you're not paying taxes on Social Security, a lender can actually gross up your income by 25%. So we're going to go through some examples for that, or at least I'm going to go through one so you guys get the gist of it, because you don't want to be listening to me going through a million of these, because everyone's situation is going to be based on their own situation. So let me pull up an Excel sheet that I created, and I'm going to go through the example with you guys. All right. So in this instant, I'm looking at 100% PNT individual, 2 children, and they're married. Okay. We're not using any spousal income. We're just using the veteran's disability income. And as a side note, you can just use spousal income to qualify as well. We're going to do a whole separate video on that. Okay. So in this case, what you're going to see is that the net income, because it's tax-free, is $4,202.42. A lender is going to gross up that income by 25%. So the veteran actually, from a DTI perspective, is going to be qualifying at the $5,253.03. Now, your monthly liabilities, you put down here whatever they are, right? If they're $500 a month, you put $500. If they're $1,000 a month, you put $1,000 a month. And if you guys want, you guys could drop me an email, and I'm happy to share this with you. I just created it pretty quick in Excel today. Okay. So let's just put it back to where it was. Not 4,000. That would be crazy. And then here I calculated a new mortgage payment. Basically, I put in a purchase price, interest rate, the term, which is 30 years, so 360 months. I put in estimated taxes, homeowners insurance, and then I remember I mentioned that the VA is unique because they actually factor in square footage for your qualification purposes for residual income. Okay? This is why you want to be able to know all those pieces, okay? And then your residual income based on that scenario, right? So here it's going to be, let's just say the Midwest, it's going to be 441 is what the requirement's going to be, okay? So in this case, the residual income of $788.13 is going to make the veteran eligible for using the VA home loan. And here you'll see their DTI is 60.2. The challenge sometimes with something like this is that lenders will have a DTI restriction and not a residual income restriction. They'll go based on what the VA says. This is why it's so important that when you go through your financial picture, not just to do it in an Excel sheet, that's just a baseline so you guys have an idea of how lenders look at this stuff, okay? If you guys want, we're happy to help. We help people across the country and also connect you with realtors across the country. You can schedule an appointment with us down below. Hit the like and subscribe button, and I'll catch you guys soon.